Maverick traders, welcome out to your market roundup for December 13th. Corey Halliday here with you. Quick reminder to make sure that you follow your trading plan. So today was quite an eventful day. We gapped sharply higher, huge rally in the morning on CPI data, and by the end of the day it left some pretty ugly bearish candles. We essentially opened on the highs and closed down not on the lows but towards the lows. So not great price action from the standpoint of to open to close. There was a lot of selling that came into the market. So as we look at returns, the Dow turned negative. It finished slightly positive. The S&P, the Nasdaq, both up around 1%. Oil up 3, gold up 1.5. More buying than selling from one day to the next. So were we up for the day? Yes. But was there a lot of selling that came in after that initial gap up? Absolutely. And it really didn't change the markets much from a technical perspective. It didn't really change the markets from any of these, advanced decline. About 2/3 of stocks advancing, and the 50-period moving average set up about 2/3 of stocks above the 50 versus below. And guess what? That's pretty much identical to what it was last week when I did the market roundup last Tuesday. So when we're looking at the markets, I put the SPY as a neutral last week. Now we are up a little bit from last week, but I'm not going to be surprised if we're right back down and that we're just kind of having these volatile days, but really spinning our wheels and going nowhere. And I think that's still in place. Markets gapped sharply higher on the CPI news. The CPI came in lower than expected, which is a good thing. We're at very high inflation, but I'm not surprised that sellers stepped in because think about it. Although they were anticipating 7.3 and it came in at 7.1, is the job done? Is this all signs of, clear? We knew inflation was coming down. Is it going to stay sticky high and still be in the 6s and 5% and so on for a while? Yes. The job of the Fed is not done yet. Do they slow the pace and do they kind of take a little bit of a pause and so on? Maybe, but it doesn't really solve some of the structural problems. And they've already been hiking rates. Interest rates have gone up dramatically. The economy is slowing. There's already going to be some effect. And remember that there's a lot of lag in this. So the raising of interest rates is not an immediate thing. It plays out over coming months. So I would anticipate the global economy is going to continue to slow and a bit of a problem there. FTX CEO testified before lawmakers. The former CEO was just arrested. The new CEO basically called it for what it is, fraud, the type of fraud that they plan certain things out, they hid a lot of details, they use customer funds in ways they weren't supposed to. It's just a big, ugly mess. So as we look at the markets, this trend line continues to come into play, and we kind of gapped up to it, but sold right back off there. And that's the top end of the range. I think what we're in at this point is a choppy environment. I continue to think that this was kind of the exhaustion high, and that what do you do after you're exhausted? Well, you take a rest, which is the sideways, and then we'll probably give some back. Now, can it trade above and below this trend line? And maybe that trend line doesn't become that important here in the future, perhaps, but I think we're kind of stuck at the top end of the current range. On the Nasdaq, it's the same thing. We're kind of at a resistance level. We tried to gap and break out. It just doesn't have it. No, by the way, it's my philosophy. I do not buy breakouts when you have a lot of recent overhead resistance. These are all dead bodies, people that bought at bad prices that want out. And as the stock tries to go up and break out, you find these willing sellers. And so it just creates this difficult path for, in this case, the NASDAQ to push higher. If you want to buy the market, buy the dip, but we have a lot of recent overhead supply, and that creates a problem that means if we are going to rally, it's going to be a process where we got to work our way through all of this overhead resistance. And you can just see how much overhead resistance there is in the NASDAQ. It's going to be a long process, probably multiple years, in my opinion, before we go up to new all-time highs in the NASDAQ. Multiple years, not a 2023 thing, in my estimation. As we look at the heat map, energy bounced back pretty nicely and was quite green. You can even see some of the oil service stocks here, and that was a pocket of strength. Tech, semiconductors, definitely a little bit more green, kind of spread out through there. Healthcare plan providers, not a great day. That was more in the bright red. And then other than that, it was just kind of a mixed bag, right? Defensive stocks finished the day more red than green, but kind of a mixed picture. A few different names had a rough day on their own. Eli Lilly, Tesla, Schwab down here, but those were more stock specific news. And then airlines, there was a big news story that United bought a massive 100 plane order from Boeing, and you can see that the airlines sold off. So not a lot of follow through and good price action there on what should have, would have, could have been good news for the airlines. So as we look at the weekly outlook, I mean, I've been here. I'm more on the zero. I talked about this a lot last week. It hasn't really changed. Even, I mean, as of earlier this week, we were dead flat to where we were last week. We're up a little bit above that, have a little bit of a down day tomorrow, and guess what? We're right back to neutral, to where we started calling this sideways. I put on a neutral trade yesterday in the broader markets, and I did that because I felt like, well, the premiums had exploded and they were really geared up for a big market move today on the CPI, and you can see why. But my estimation was that while it was going to be volatile, my opinion was that it would probably fade. If there was a gap up, it would probably fill. And by the end of the day today, I was up 50% or so on that spread. So I still held on to it. I still think there's more neutral, kind of choppy behavior to come. Tomorrow is the Fed meeting, and the Fed meeting might fuel a little bit more volatility, but the CPI was expected to be the large event, actually more impactful than the Fed meeting itself. And I still kind of think that's the case. And those are two big hurdles. And then the market kind of quiets down from there. So I think the fact that we couldn't hold the gains today and that volatility got crushed towards the end of the day speaks volumes for that sort of neutral outlook. So as I'm looking at different trade ideas, I came up with the following. Berkshire Hathaway, none of these are really urgent because I'm just not trading a lot. And what I am trading is not super exciting. I don't do a lot of neutral based trading where you're trying to make a little bit from some theta and a lot of sideways stuff. I don't do a lot of that, but I'm certainly doing more of it right now. So I'm not a big kind of short term. Yeah, I talk about this. I usually put on a trade. It has 1 month, 2 months, 3 months to expiration. I don't do a lot of ultra short term strategies because my philosophy is it's easier to know what is going to happen than when it's going to happen. I can get a lot of the what's right, but the exact timing on it is more difficult. So if I give myself a couple of months, the trade plays out, even though I don't have the precise timing picked out perfectly, I make money. And that's kind of where I've been on Berkshire. I've talked about this one, buy the dip mode, because I think we're in this process of basically see the zigs and the zags and so forth. And I think we're going back towards that high. Now, how quickly we get up to 360 and the manner exactly in which we do it is debatable. Again, there will be some choppiness and so on, but I would expect it to continue to outperform as it has all year to date. And I would anticipate that we're working our way back up towards that level in kind of a rounded formation. So, which means more buy the dip mode, back up towards 360. And that's what I continue to look to do. Again, speaking for myself, I did a Berkshire Hathaway I have a credit spread on that's making money from time and volatility decay, and it's not a quick profit maker, but it's building some profit slowly. Now, if you want a little bit more spice in your life, there's a couple of names here that I feel like there's been a shift recently. Some of these growth areas of the market have been left for dead, and I'll be darned if they're not showing a little bit of relative strength recently. A little bit more strength than the broader markets in some cases. And this chart doesn't look fantastic, but it's sort of a stronger chart in that we're now bottoming out, and you can see that we've broken to a new high and even closed and settled at a new high, right? So we're trading better than a lot of other names out there. Now, again, we've got the problem of overhead supply and resistance, so I'm not real inclined to buy this breakout, but what I am thinking is that we get this choppiness or pullback. I would kind of been more of a profit taker today, but imagine we get a little wedge pattern, a little bit of a flag pattern, something like that is what I suspect comes next. And it would be on my list as, hey, buy the next dip, buy the next consolidation for that next run higher. So if we get a little bit of a resting period here, then I would anticipate an entry. And I'm going to say the same thing about Pinterest. These are that high growth area of the market. It broke and it settled at new highs. Now this one's a little better than PagerDuty, but Pinterest trying to break out. I don't really trust chasing the breakouts right here, but imagine we kind of get a consolidation, a flag pattern, something like that, then I would be apt to maybe buy those into a year-end trade. I continue to have SPY on my neutral list. Not a lot has changed both in the chart and in my outlook. So I said last week, I think as you sell off, I'd look to be a buyer, and I did that a little bit. As we rally, I'd look to be a seller, and basically I'm doing that as of today. So it's not real lucrative because I think it's just more of a theta and volatility crush type of dynamic, but so far so good on that outlook. On the bearish side, Coinbase, I'm going to put this in the category of the GameStops and the AMCs. These are names that I've talked about shorting because I think that story is over. These are the meme stocks, right? These are the ones that when the markets were booming and people were getting checks from the government and opening their Robinhood accounts, all of a sudden they went after these type of meme stocks. And actually Bed Bath & Beyond is on that list, and there's others. So why am I putting Coinbase? Well, I think the boom bust cycle in crypto, which is where Coinbase operates, is very much related to these. And I'm going to add another one in here, MSTR, which a lot of people look at as kind of a Bitcoin ETF of sorts, but maybe worse than that. That's a software company where the CEO has basically been piling billions of dollars into Bitcoin, which actually they're upside down on pretty dramatically. So these are all potential bearish trades. They're all kind of the boom and bust. And now Coinbase, ugly candle, reversal. Does it probably just trade lower here? Probably so, but you'll get some spikes. And I don't know when it's going to happen and where it's going to happen, but some sort of news will cause this to spike for a couple of days. And on those spikes, I think that's always the opportunity. We're in every time it spikes, you want to short it and play the next wave. We've been talking about that for the past few weeks in AMC and GameStop, and recently reiterated those, and my goodness, isn't that just falling apart from the mid 20s down to the low 20s? Now, do you keep shorting? Keep shorting. You don't press your shorts as much as you use these spikes to re-engage, to reinitiate. So today is I don't think we're done selling off, but today is more of a profit-taking day in that as we sell off, lock in some profits on the way down. The next time it spikes, re-engage and wash, rinse, and repeat. That's how I'm trading them. And we want more of what's working and less of what's not. And that is what's working. That is what's working in the market. So I don't see why I'd get away from it. PayPal on the bearish side. And PayPal's a little bit intertwined with that whole dynamic. They certainly got into crypto and different payments and opportunities and things. And you can see here, whoops, I was just going to draw kind of a descending triangle. The flat bottom and the lower sloping highs. So that's more of what I see as kind of that descending triangle. We had hit these lows back mid-year. We've kind of been flirting with them, used the spikes up to reinitiate shorts, and as it plummets back down, take some profits. And then I think you just wash, rinse, and repeat. So markets are still in a bear market overall, in my view. That's kind of the long-term viewpoint, right? We're still in a big picture downward trending bear market, but in the short term, we've been in this upward phase, an upward correction in an otherwise bear market. For now, I think it's more neutral. It's fade the rallies, buy the dips, same recipe that we talked about last week. I still think that's in play. FOMC meeting tomorrow. Will there be some volatility around it? Yes. Is it likely to kind of fade some of those initial reactions? Yeah, probably so. Based on today's price action, I would expect at some point for us to sell off, but it doesn't have to do that. Ultimately, I think it's kind of choppy. Earnings reports, we've got Adobe, Darden Restaurants, Lennar, a home builder, so a few companies there, but we're pretty much past earnings season. Hope you've enjoyed today's market roundup. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.